Well, good morning. I'm John Gibson with Flotek. I'm CEO. Joined in January 2020, just in time to enjoy COVID as a business driver. And I've been there for a couple of years, and we really were in the phase of doing a turnaround even at that time. And I want to sort of take you through the journey since then, sort of what the mission, the values, the products are, and then what we've done recently that has really transformed the company in terms of where we're going over the next decade. And there are not that many companies that can have confidence in annually recurring revenue for a decade, and I'll sort of walk through how we're approaching that and the opportunity for our shareholders to vote on it. The very first thing is we're a chemistry business. So everything that we do is about chemistry. And not at all like the panel that was talking about chemistry earlier this morning, but chemistry primarily in the industrial sector for the oil and gas industry, also for the solar panels industry, for the ag industry. We'll talk a little more about these as we go forward, but we have a pretty simple vision. Let's see if I can make the slides go with me. Forward-looking statements and no slide. There we go. And that is that we do take ESG very seriously at our company. And I'm not really fond of the term ESG. ESG, we've been doing this for 30 years, and people seem to think that all of a sudden the oil and gas industry adopted sensitivity to the environment in the last year, 2 years. We've had balanced scorecards, we've had triple bottom lines. There are a lot of things that have sort of been the precursor to ESG. And ESG is not a fad or a slogan or a greenwashing attempt. It's just really a commitment to the environment of being efficient, of having the lowest cost, producing the least damage, giving you the least liability. And we're absolutely committed to that. That is our culture. We want to reduce the environmental impacts of our industry for our operators through all aspects of their business. Now, to that end, we adhere to the EPA's 12 principles of green chemistry, and I won't walk you through all of those, but it's worth looking up because it's not just about being non-toxic and biodegradable. It's also about the minimization of waste, the minimization of reactants, and so how do you approach it from waste disposal, from CO2? We were talking earlier with a client about returns, right? When you order too much and have to ship it back, there's CO2 consequences of that. So, we think about it in its totality. So our mission is to be the partner of choice for them in reducing their liability, reducing their emissions, reducing any possibility. It's almost like an insurance policy that what you're injecting to improve the performance of the well has no impact on potable water. And so the oil and gas industry, one of its principal challenges is ensuring that what we're injecting in wells, because of problems behind pipe, because of faults, because of fractures and other things, that those fluids can move in the subsurface. If they do move, we want to give you fluids, if they move, have no consequences for your company. So that's the chemistry that we develop, and I'll talk a little bit more about it in a moment. So our value proposition really is that we can come into companies and we provide both the molecules as well as the digital ability to measure that chemistry in real time so that you can understand what you're producing, how you're producing it, and the impacts that it's having on your production profile. Our real challenge in this market, in this world, and we take it seriously, is giving our customers the social license to operate. And so the only way you're going to do that with the challenges against the hydrocarbon industry is if you're absolutely responsible and accountable for every action that you take, and you don't get defensive or don't make excuses. You get about the business of really doing the best job that you can and providing affordable energy to the whole of the world without doing any damage, and that's our value proposition. Now, we have really simple strategic priorities that are associated with that. The first one, as you might expect, would be environmental leadership. And we are absolutely focused on every aspect of protecting where we live, where we work, the communities we work in. The second one, a strategic priority, and these are the business strategic priorities more than the environmental, is I've been in this industry for a long time, evidenced by the color of my goatee, and low leverage is like absolutely essential. I've been through several cycles, and one of the real key elements to success as a service industry in oil and gas, and I suspect any industry, is that you can't tolerate high leverage. We're just not in a business that can go full cycle with high leverage, and I'm going to talk more about what we've done to grow the business, and we set about doing doing that without leverage. And so we've used equity as a tool, and we'll discuss that. But our leverage now, we have a small PPP loan we think will be forgiven, but minus the PPP loan, we're a company that's carrying no debt on the books. Sustainable revenue. We purchased a company, JP3, and you'll see that we're doing this for the chemistry company as well. I think is unique, is we really think that ARR is where you get the maximum multiple, you get the greatest amount of predictability for shareholders. You get the confidence that you're making an investment that'll be safe over the long term in a cyclic industry. So we have made a substantial effort to move to sustainable revenue on the whole of our business, and I'll show you the contracts we have pending in just a moment. Capital discipline. I'm going to, as we talk about that contract, we actually have the ability right now to grow our company. Last year we did $43.3 million in revenue in 2021. Please hold that number in your mind. I'll talk more about it in a moment. But with the infrastructure to produce the chemicals, we can easily bring that number to 500 plus million without building any additional facilities. That's both good news and bad news. That will tell you how much capacity we had in the past and how far it had come down during COVID. But our ability to grow from 43 million to 700 million in revenues can be done with just normal maintenance. And so our ability to spend little capital with regards to infrastructure and grow the organic business is quite simple. I'll show you a picture. We are focused on profitability. As we discuss, this sustainable revenue gives you the chance to manage your cost structure very diligently so that you know how much you're going to produce and over what period of time you'll produce it. There's some ramp up issues that are required in order for you to get to profitability when you're growing from 43 million to where we're about to go. But at that point, we will be, our desire is to be in the upper quartile in terms of the metrics that we would use to say that we're best performing financially. One of those would be SG&A. So we'll take our SG&A, which was above 30% in 2021, to single digits as we go forward with the contract I'll talk about in a moment. And then finally, to do all of this and to grow this quickly is really about flawless execution. Flawless execution last year, we had 0 total recordable incident rates. And so for those that don't know what TRIR is, that means on our safety performance, we had no one injured. We had no lost time incidents. I've never done that in my career. First time in the history of me that I've been associated with a company that achieved 0. That means everybody went home every day with the ability to come back tomorrow and work without any injury. That's really an operational challenge that very few people achieve. When I first started my career, the numbers were typically over 10. Now you see people at 0.1 or less, and to achieve 0 is just incredible. We also had no NPT, which is non-productive time. So if you're late in a shipment to a well site or to a job, that creates non-productive time for them. And if you can imagine, they're leasing equipment for drilling, leasing equipment for pumping, and as a consequence, you being late costs them quite a lot of money. So flawless execution is about everything from our logistics and delivery to our people and the treatment of our people and safety for the company. We think we have a fantastic focus in the culture on these priorities, and as a result, we've been able to develop, particularly because of the environmental leadership, an opportunity to establish a contract that we'll talk about. Let's see. I'll go quick through this. I mean, we are an international company, so we're selling chemicals and digital solutions both in North America, but particularly in the Middle East. And then we do have some delivery on the other continents and the ability to ship there as well. We started in 1985. We are on the New York Stock Exchange. You'd see us listed as FTK. And have 2 research centers, both of which, if you have a chance to visit, are pharmaceutical quality research centers that are delivering capabilities to the oil and gas industry. And we can talk more about that if there are any questions. Now, this is the banking slide of required pictures of old people to tell you about experience, and so we have a lot of experience. We have an organizational structure that's really lean. We did during COVID sort of get rid of everything that wasn't absolutely necessary, and so we are adding back a little bit as we go, but we've got a fantastic team of people with a lot of experience, all of which I think speak better than I do, so hopefully you'll see them speak one day. I'm going to skip through almost all of this, and so that I can get to this. Okay. Now look at my watch here, and then I'm going to talk until I run out of time. So what has happened to us? So we had fantastic customers, particularly in the oil and gas industry, and those customers provided the $43 million in revenue last year. We saw that the industry was shifting towards the equipment providers are in very short supply. And so the people that are delivering equipment to well sites have been very disciplined in their addition of capital. Consequently, the people that are pumping have the ability to pull through other revenues. So we reached out to one of the pumping companies, ProFrac, and we made a proposal to them that said that we would like to be the company that you pull through. And in return for having X number of your fleets, because the number of fleets was staying fixed, instead of you seeing a large increase in the number of fleets that are pumping into wells, people are holding those and being very disciplined at the moment. And so trying to grow organic market share when you're this small was difficult. So I used a venture capital methodology that said if I can use equity to get a contract that will move us forward, I'm going to attempt that. So we spent some time talking with them, and the very first thing that happened was we arrived at an agreement that was a contract that began on April the 1st and is already being executed. It's a 3-year contract, and it's for 10% of ProFrac's fleet. And the slide says, or 33% of ProFrac's fleet. It actually is, I think, 70%, but we'll go back and check that number as we go through it. And we're going to provide all the chemistry to those 10 fleets. Now, a fleet typically during the course of a year pumps somewhere between $7.5 million and $10 million a year per fleet. So if you look at the 10 fleets, we'll say on the low end, $75 million a year. And it's a 3-year guaranteed contract, so that's going to be 225 million más o menos. And that 225 million has liquidated damages, so we're guaranteed 25% of it, whether they buy any chemistry or not, or otherwise they wouldn't have gotten any equity. So there's a guaranteed payback to us on all the chemicals that they're purchasing. So this is guaranteed. We already have 10 fleets, 225 million, 3 years. And we are ramping up on that as we speak, beginning on April the 1st, and we're very excited about that. And a part of that is ProFrac is so dependent upon us in the chemistry, they asked to nominate directors, and so they had the ability to nominate 2 directors. Now, what happened as a result of that is that the conversation was really exciting because we saw all of the opportunities for scale and scope, the ability to really partner on helping on ESG and helping them build an environmental story, particularly for our customers, and leveraging their customers and our customers both through an indirect and a direct channel. Indirect meaning selling to service companies that sell to oil and gas producers. Direct meaning selling to producers, and we do both. We entered a second discussion. And the second discussion was, can we move from 10 fleets for 3 years, which is contracted, could we do 30 fleets for 10 years and have that contracted revenue? And the answer was, yes, we'd like to do that. And so we negotiated some additional equity, and they signed on for 30 fleets for 10 years, but the amount of equity exceeded what we can just issue, so there's a special meeting that's going to be on or about March the 9th, which is, there's a proxy out for our shareholders to vote for the contract. Now, using the same methodology for determining the revenue per year for the liquidated damages, because you have to have a basis, and we agreed on trying to set that at a lower level. We weren't just trying to produce damages for no reason, so we set it at a number we felt absolutely confident that they would use that volume. Again, you're looking at 7.5 million per fleet per year, or up to 10 million per fleet per year, or even potentially more. And so you're now looking at a contract that has a value of $2 billion over the next decade. That's a take or pay contract that we are hoping that our shareholders will approve on the proxy on May 9th when we have the special meeting, because it's super exciting to us. The scale and scope that it brings us allow us to be in the supply chain buying it at incredibly reduced rates to what we were purchasing when we were very small. We've got preferential opportunities with the chemical suppliers, and that brings forward opportunities with both our customers and our indirect channel. Now, as we go forward, they get to name an additional 2 directors. And we're excited about the opportunity to bring bio-based, non-toxic, biodegradable chemistry following the EPA 12 principles to the oil and gas industry so that we can improve the social license to operate there. I don't think I've ever seen a service contract that was this long, had this much of a guarantee, it had this much upside, and worked so well to give a company the stability that it needs to grow further. And so imagine this is the foundation, and that there's no exclusivity here, so the moment we signed the contract, their competitors of ProFrac began to call us because their company sort of gave us the good housekeeping seal of approval. And we're able to continue to grow the business with their competitors and with direct sales as well. The other piece that we brought that does not exist at all in the ProFrac portfolio is we're an international company. And so almost everyone on that management team has lived and worked outside of the U.S. to include numerous countries in Africa, Asia, Canada. We have quite a lot of experience. Mike lived and worked in France, I think is correct. And we've got Namibia, Nigeria, Indonesia. So, I mean, we know the international market, particularly the Middle East. And we have a very strong footprint in the Middle East. And we're beginning to grow that. We've got some great opportunities with one of the world's largest oil and gas companies there on the peninsula. And both in the chemicals business and in the digital business. And so it's really exciting. So with that, let me see if I've got one more slide. I hope I do. Okay. I tell you what, I'm not going to go through this, and here's why. It's really hard to even talk about 2021 when you did $43 million and you now have a contract annually that when we get approval that will exceed probably $250 million. So trying to compare 2021 to what we see in the 2022 after April 1st, so the 12 months following April 1st, I think is an impossibility. That's comparing, apples and hand grenades or something. But 2023, I think, is going to be the year in which we're going to have the most exciting outcome that any service company will provide with regard to where this takes us, how we're able to grow the company, and what you can expect. And another area that's emerging after listening to the talk just before us is our JP3 division. We have a new use case that looks really promising, though we haven't sold a lot yet. When I explain it to you, it's so simple. I hope one of you will call me and say, you should call these people. But a lot of people are using field gas now to power generators, both for home use as well as for compressors and in the field. And in order for you to do that successfully, you have to have consistent feedstock. You need a BTU value that's reasonably constant. And so people are trying to use gas chromatographs, which take anywhere from 3 to 10 hours, depending upon how you're doing the analysis. You need to daisy chain them. With our JP3 sensors, which are near infrared, we're measuring the composition of the gas in real time, so we can tell you the BTU value of it in real time. We do that. We have a library of 30,000 samples plus where we've already done the measurements and then we've loaded them to the library. So it's not dissimilar to the fingerprint library where we're looking up the compositions, and so we're able to do it very quickly with a chemometric model. But what it's allowing us to go out and sell now, we've got a pilot coming up shortly, is they're using the field gas, so there's no transportation of diesel. There's consumption of the gas that's very low cost in the field with very low CO2 footprint. And our device allows them to see the BTU value, and you can either regulate it so that we can allow you to put in a regulator that maintains a consistent BTU by varying the volumes. So you take no chance on being too lean or too rich in your power generation. Or if you've got a contract that says they must supply you a fixed BTU value and it's out of spec, you're able to stop and then go back to the supplier. And so now in real time from your desktop anywhere in the world, you can look at the field gas that you're using to power your operations, and there are thousands of these generators in the field today. You're able to really save your capital equipment investment and to optimize the efficiency of your operation by using field gas in a way that doesn't give you the risk of actually damaging the equipment. So I'll end by just saying, wow, a company that don't look to the past for what we're doing. Our future is completely different than the past. I think we're going to have an April that will be incredibly interesting because of this contract compared to April a year ago and many Aprils. And we're delighted to be a company with this kind of backlog, this kind of annual recurring revenue, and this kind of opportunity for shareholders to vote on May the 9th. So if you're listening, and please vote yes, and let's get about the business of growing this company. And I'll take a few questions. Yes, sir, Michael. A good question, Michael, and thank you, Noble, for having us here. I really appreciate the opportunity to speak. So to do that, we have a facility in Marlow, Oklahoma. We can handle about 3 million gallons a month. And so we have all of the storage capacity, the tankage, et cetera, to do both EPA and FDA chemicals as well as oil field chemicals. And we've hired very few people to do this because our plant was organized to do 3 million gallons and we were doing less than 300,000 gallons a month there. And so the ramp up really is taking advantage of an existing facility, and we had kept the staff in place to be able to operate the facility, and we don't need a lot more people to do that. Probably our biggest issues is delivery. And so trucking industry is challenging now, and so we're working quite hard to make sure we've securitized the trucking so that our delivery times prevent NPT or non-productive time at the wellhead. And then the supply agreements that we have. Imagine that you're going from buying very little. We had to work on our credit limits, et cetera, with some of the suppliers because the volumes that you're buying in are quite large, and everybody's been super amenable because they can see that it's a contract-based opportunity and not something that has a high uncertainty in it. So everything seems to be reasonably easy. Michael, finding labor these days, though, can be challenging. And this whole great resignation is a problem for everybody, even in rural areas. And so getting people is hard, but when we get them, we tend to keep them. So it's probably our biggest issue is people. Anything else? Yes, ma'am.
You were talking about, opportunity to shareholders. Listening lately, very much talks about all these cryptocurrencies or whatever, the people is putting their money there. How established, tangible companies with a great future like you are opening to facilitate these opportunities for shareholders? Like for these kind of people like that, how you market, how you prepare yourself to open your company for this kind of investors?
Okay.
People is putting, from $1 to $2 to something intangible that is over there, and maybe we're thinking one day kill one of the satellites and that is gone.
Okay, so a lot of questions in the question. So the framework. So I'd say quickly that the framework for doing what we've done is this. You've got to have people that don't mind taking risk, that are outside of the box in how they construct a contract and their willingness to work with people. You have to have imagination. You have to have a management team that supports something that is different. When I first came in, this was a typical oil field service company, and I said, I don't want to be this. I want to be a green chemistry company. took about a month. Now everybody there would tell you they thought of it. That means it was a good idea. And so I'm excited about how the culture's changing to a green chemistry company. I'm excited about our willingness to take risk in going after a contract like this and using equity and adhering to our principle of no leverage. And so I think we're doing all that we think we need to do to be a great company, and I'd love to work with somebody else that wants to do it. And I'm out of time, is my facilitator says in the back. Thank you.